The free money is over. The Fed finally ends the BTFP. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard, as the Ainslie Group celebrates 50 years. Today, we welcome back Branko, who's been looking into the upcoming close of the Bank Term Funding Program and what we can expect for the markets as a result. How are you going today, Branko?
Good. Very excited to talk about today's topic. I think it's a bit of a callback as well to some work we did earlier in the year and some of the lessons that we've kind of learnt from that. And yeah, very interesting topic today.
Well, yeah, you certainly were talking about this early in the year, and we've really followed this the whole way through from when it first came about. Over a year ago, sort of now, or around about a year ago now, when we had all that stress in the markets, and then as it unfolded and issues we had with it along the way. But maybe start us off today by taking us right back to what that program was, and then more recently, what you talked about in the news today, how it was actually manipulated.
Yeah, so basically in the wake of the Silicon Valley collapse, I think pretty much close to almost a year exactly.
Pretty much exactly, isn't it? Yeah.
Yeah, it's pretty crazy. They decided that they were worried about kind of the banking system and implemented this bank funding term program to allow distressed banks to pay their depositors back.
Mm-hmm.
So that was the intended purpose, to stabilize the financial system, but in reality, it's probably just worsened it, if anything. So that was what it was meant to do, but then banks were just basically using it as an arbitrage play, which we'll get into, and they were not using it for its intended purpose.
So the arbitrage is interesting to me because we were talking briefly about this before we came on air. In hindsight, we feel kind of a bit silly about this because obviously, if you're going to buy back distressed debt and just give banks money, it's going to be manipulated, right? So can you maybe give us a bit of detail about how that particular arbitrage actually worked and who ended up paying for it?
Yeah, so pretty much, that's a good point. It's a bit of an egg on my head. I think in hindsight, firstly, we should have seen this coming a bit. I thought there'd be more checks and balances in terms of how the distressed assets, how it would have worked in terms of you can't just get this money for free and then do nothing with it.
Yep.
But in reality, there was literally no checks and balances. So how the arbitrage would work is they would have this distressed debt, they would get it valued at par, right? And they give it to the Fed, and then they would pay the Fed interest, small interest, and then they would basically use that money just to receive the Fed funds rate risk-free, and they get 60 basis points a year, which might not sound like much, but when you're dealing with hundreds of millions, billions of dollars, it adds up. And so overall, banks made over $47 billion.
Wow.
It's only around 3 months, right? It's 2 or 3 months. So taxpayers are effectively basically feeling the brunt of this indirectly because, this money just can't really fall from the sky. And basically the Fed's going to get into further debt and taxpayers will have to alleviate that in some capacity. So quite honestly, an obvious scheme we should have seen coming, and taxpayers will pay the price.
And I suppose this is always going to be the case, right? If you create a situation where you're bailing out any group, and this has been the case throughout history, not just this example, whenever you're bailing out a group, some other group who's smart, the vultures come in and figure out a way to take advantage of that. So it's not necessarily a bad idea in the initial sense of helping those banks, because let's face it, we were all paying attention to that at the time. There was real contagion risk at that time that it was going to flow through to other banks, potentially damage the whole system itself. So it made sense at the time, but sometimes the cure, can be worse than a disease playing out. And that seems to be a little bit of what happened here. So does that explain maybe the increase that we saw? Because we saw that BTFP balance. So we saw that balance continually going up. And I know you highlighted a chart on that.
Yeah.
Is that what was going on there? And did we and others, because we certainly weren't the only ones, interpret that incorrectly by thinking that there were more distressed banks when really it was just people lining their pockets? How do you see that angle of it?
Yeah, so at the time, I think, I made the mistake in that thinking that these balance increases, especially with some news around regional bank struggles, which, by the way, they're still in stress. It's not like these banks are just not are doing well now on their books. A lot of them are still in significant stress. So that problem isn't solved. And we saw this, not the big increase like we do now, but we did start to see this big increase, around probably November, December.
Yeah.
And then it kind of skyrocketed up. So, in hindsight, it was clearly the ARBs, I think, because the rise isn't quite as extreme as during the SVB crisis, but it is still significant. And I think that the big lesson here is like, how data can be misinterpreted and the issues with it. I mean, because I was looking at that graph with basically the context of this is what the graph means, and
yes,
I was like, this is what it means. If this gets tapped into more, it must mean that the banks are struggling and need to pay back depositors. But I didn't think that, it could be another reason. So I think the lesson moving forward is, graphs might move up and down, and the reason that we associate with these graphs might not be the reason that it moves. If that makes sense, because
well, the concern for me around that is something you said just before. These regional banks are not actually out of the woods, right? Like the deposits were still draining, and there hasn't been a mass influx of new capital coming from the market into those banks. So what happens the next time, right? Like the next time that they come under stress, have we in some ways learnt, well, maybe it's the right lesson, maybe it's the wrong lesson. Do the regulators not come back in and bail them out because they go, well, last time the banks just took advantage of that loophole and made all this money. But what if that ultimately tips the whole system into sort of a downward spiral? Like that seems really dangerous.
Ironically, on that first point, real quick, the banks that were taking advantage of this were larger banks. Because if you're a regional bank,
they weren't even the ones in trouble.
well, regional banks can't afford to just park money and get an arbitrage opportunity, right? Because they're trying to pay back depositors. So I think that it's actually big banks that were causing the problem, which will in turn hurt the little guys, or not the slightly less big banks. We won't call them little guys here, right?
The slightly less big guys. I like that.
So that's kind of the first point. And I do agree that it's going to be an interesting situation. I think it's kind of tie into a broader point about Fed incompetence, basically. And like this solution was a poor solution, obviously. Taxpayers got robbed. Big banks made tons of money. The rising rates this whole time, also highly questionable. So there is definitely a lack of trust in Fed decision-making. And they're probably going to, it's difficult to say if they're going to try and enter in the next, banking kind of stressful situation. I do think if it's a smaller bank, it's less likely they're going to jump in now with this added pressure of this kind of mess up. But I still think if it's a big bank like SVB, they're going to jump in and no matter what, have to save them because the state of the financial system is really on the line.
Yeah, and I have to agree with you there a bit because I know that ultimately the Fed can say its mandate is, employment stability and rates, or they can give any number of reasons of why they exist, but see, you do not want to be the Fed chairman or any Fed official overseeing the collapse of the economy and actually sending us into a situation like we're on the brink of with the global financial crisis and experienced during the global financial crisis. So, it's not that long ago. So I think they're still a little bit anxious around that, and I tend to agree that they will jump in. I think the bigger concern is that word incompetence. It's the right word here because you have a lot of very smart people who should be behind these decisions. They seem, you would imagine that all these people in the room when they were discussing the bank term funding program. So how did they not see the potential for these loopholes and put guardrails in to stop that from happening? Because really, I think part of what you said in the article was now they're just adjusting the rate so that it closes up that arbitrage opportunity. Well, that could have been around from the start, surely.
Correct. So they did say they're going to adjust it. So the arbitrage opportunity is gone, and then they said we're going to end it. So you could say they could just, fully adjusted it so that opportunity didn't exist. But they chose not to. And, it's $47 billion is a lot of money here. Let's be aware.
Yeah.
Like we can't lose sight of that. I mean, that's even for like the US, that's huge, and it wouldn't be surprised if a lot of these banks have their best fiscal quarters in their history with this money.
Well, and I would like to put one more point on that, because I was looking at some information this morning about FTX and talking about their $7 billion to $9 billion. It was somewhere in that range of customer funds that they may be able to return. And remember, that $7 to $9 billion in FTX was front page news. We were all talking about that for weeks and months, and that was even mainstream, how that was focused on. Yet you've just raised a much, much bigger number, and you just really don't hear about it at all. And that's amazing in some ways, isn't it?
Yeah, there is. Again, I mean, I know we're a bit pro crypto here, but it is quite an anti-crypto bias, again, from the mainstream media. Like, regardless of what you think of Bitcoin and all this, I mean, the fact that the attention that was given to the FTX saga and the villain that Sam Bankman-Fried was rightfully made out to be, where are the villains here? Like,
yes,
where's the front page headline? Why don't we find out where these Bahamas penthouses are? I mean,
well, and there'd be a few with that sort of money.
Yeah, I mean, I know it might not necessarily be illegal, and again, it could all be legal and kind of fine from that sense, but it's still insane that this kind of money can go missing from the system and no one's held accountable in any way.
Boggles the mind.
Yeah.
Well, thank you so much for that today, Branko. I really love that discussion. I find it fascinating that those numbers can just sort of not be front page news, but here we are. We're trying to do our bit at least, so that's what counts. So thank you for that.
No worries. Thanks, Chris.
Thanks, everyone, for watching. We'll chat again soon.